Hello, everyone. Tonight we're going to be working on Module 9, Excel Project 9B. And this deals with primarily working on financial functions, an amortization schedule, which everybody should know how to do one, whether you're doing one for buying a car or a house or any other kind of loan where you're borrowing money and you want to figure out what your payment needs to be and, what your interest is going to be and all that good stuff. And then the other thing is going to be, depreciation and then a minor thing about checking errors. This is not a really long project. It's about 15 steps. Let's just dive in and get started. Uh, Step one, after you've done all the preliminary things about naming the file and all that good stuff. Step one, Juan Rhee is considering whether to start a software company called Chargo, and it's going to make wireless chargers. He's using an Excel workbook to analyze financial data for a loan that will fund the projects. And what we're doing is, I guess, the Juan has created this sheet and there's some errors on it. So step one is basically seeing what this person has done wrong. So what we have here is a loan amortization schedule. And we have the amount that they borrowed, their interest rate. Now, every time an interest rate is given, it is always expressed in annual terms. But since Juan is going to be making monthly payments of 4.85% divided by 12 months, the interest rate is really going to be 0.4% per month. You multiply that by 12 and you would get 4.85%. That's the monthly interest rate. That's what we're going to go with. And yeah, they're just got to pay back the money in 5 years. But we're going to base our calculations on 60 months instead of 5 years because the interest of 0.4% is going to be calculated, compounded monthly instead of annually. So what this is a $478,000 loan. The interest rate is 0.4% per month, and we're going to be making payments for 60 months. Now, to calculate the payment, okay, I can look at this right now and just see that that's the wrong formula. But the problem is telling you, I don't really need to do this, but let's follow the instructions anyway. In cell D11, use error checking to identify the error in the cell. What that would be under, I think, data. Make sure you're clicked on the actual cell where you're getting the error. And it's under error. Oh, I'm sorry. It's under home and editing. Well, I found this earlier. Well, oh, formulas. I'm sorry. It's under formulas and then error checking. So if you click on it, it will tell you the formula contains an unrecognized text. And if you want to know what that is, you can click help on this error, but that's not really that useful because it just takes you to a Excel thing, internet page where you can read about it, which is all well and good. The other option is show calculation steps, and it's underlining what's wrong. Evaluate. Okay, anyway, I'm not even exactly sure how to do this. The thing is, we're trying to get the payment. It's the PMT function, not PAY. So just change that to PMT. Oh, sorry. Okay, it just equals PMT. I've got an older version of Excel, and that thing, that little at, this isn't supposed to go there. So instead of PAY, it's PMT. That's all. Just change the PAY to PMT. Then you're done. And it says correct the error for part B. That's what we just did. So you should get 8988 payment. If we pay 8988 per month for 60 months, we are going to have this loan paid off with interest. obviously 478,000 divided by 60 months, that would only be 7,966 per month, but that would just pay off the principal. We got to pay the interest too. So this will get us there. Right. Step 2, correct the divide by zero errors. Generally, I just double click on the cell and you can see right off the bat. All right. This is taking cell G11. Okay, the principal remaining, but it's dividing it by D5 up here, an empty cell. Of course, that's not going to work. What it should be is dividing by D6. So I'm just going to take this and drag it down like that. Now it's fixed. Hit enter. It's fixed. Okay, so another way you can do that is just go up in here instead of D5, just backspace and do D6. And it looks like it's wrong all the way across. See? Okay, so I guess we just drag this across. All right, she should have 100% there. When I did this earlier this afternoon, it defaulted to the number 1, which is the same as 100%, but for some reason it was a 1. And if that happens to you, just go up here and click the percent sign under number, and that'll change the formatting to percentage style instead of number style. Now you can see the principal remaining even after year 5 is still 100% because we do everything. Well, that's because we haven't put our payments in there. So that's what we're going to do now. We are now on step. Well, this thing about tracing dependence, let's take a look at that real quick. It's kind of an okay trick, I guess. What you do is, you have your error. I double click and I can just see the error. But another way to do it, what they want you to do is trace dependence. Okay, it's not in the right click. So again, just go under, I guess, data, was it? I keep forgetting. Or review or formulas. Okay. So if you're on the cell, you got to be clicked on it. If you go into formulas, you can do trace dependence. And it's not working. Oh. Wait, trace precedence? Okay, there we go. So it's not a nice little function where it'll just show you, ooh, it's referring to this. And that's wrong. But I mean, what do you do with this? You can't really do anything. Just hit remove arrows and fix the darn thing. 6, right? Oh, it went to 1. See there? Oh, okay. Well, if that happens to you, as it just did to me, just go up here and hit the percent sign. That'll change it to the right format for that cell. Drag across, and we're done. So anyway, that's step 2. Step 3. Now Juan is ready to calculate the annual principal and interest payments for the startup loan. Da, 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 da. Okay, we're going to enter these weird formulas that I honestly have not ever used before in my job. I've done many, many amortization schedules, but I've never done one where we use these formulas. I'm on step 3A, by the way. And let me just show you what a amortization schedule is supposed to look like. This is one with the same numbers as in your problem, but here's the loan amount. And it's set up really nice. This is available in Excel templates. If you go under File, New, and you can just search online templates. There's business, and there's an amortization schedule in here somewhere, or you could just go up here and type amortization schedule, and you will find this template. So what's neat about this is it's set up for 4 years, and we're borrowing money for 5 years. See how it added the 5th row automatically for you? It's set up for 1 payment a year, but we're making actually 12 payments a year. So boom, what happened now? It went all the way down to 60 months. Now, this is very important to understand. We did go over this in your introductory accounting course, Accounting 101, but just be aware that the beginning balance is what you owed. The payment is calculated, okay, by Excel. And of this payment, a certain amount is out the window as interest and the rest pays down the loan. So our ending balance of the loan is what we owed at the beginning of the month minus what the loan was paid down by. The interest is just money out the window. So this is a really neat schedule. The cumulative interest we've paid is $61,000 on a $478,000 loan. That's not too bad. But what if the interest rate was 10%? Yeah. Then we borrowed 478 and the interest alone is 131. Okay. So we're really paying back 500 and $600,000, aren't we? And of course, as more the interest rate goes up, the more our interest is going to be. So obviously, when you're getting a loan, you want to get the lowest interest rate possible. Anyway, let's go on, get out of that, and do the one they want us to do. I don't care for this one too much because they're asking us to calculate the interest for the whole year, year 1, 2, 3, 4, 5. But we're making monthly payments. So this is a rather complicated formula. So I'm going to use a formula wizard here. And they're telling you which formula to use. I don't think you're going to see this on the MOS exam, on the certification exam. So I wouldn't waste too much time trying to memorize this. CUMIPMT. That stands for cumulative payment. Search under all, go. There we go. So this returns a cumulative interest paid between two periods. All right. There's 5 arguments. The interest rate, again, we're going to use the monthly interest rate. The number of periods, how many payments are we going to make? That's 60. The present value is what we borrowed, that. And the start period is G7. Oops, sorry. The present value is that. Be sure you go to the next window there. And the start period is here because we're starting in month 1 and we're going through to month 12. That is going to give us 12 months of interest at 0.4%. What is the total? And just to save a little time, we are eventually going to be dragging this across to fill it in with the fill handle. As we drag across, we do want these two numbers to drag across, but we do not want these numbers to drag across because that's an empty cell, that's empty. The formula is going to be all messed up. So this D8 right here, and we need to freeze it. Some of you can click on it and hit F whatever. Is it F2? No, F4. Yeah, mine doesn't work like that. Just put the dollar signs in front of that. So everything over here in the left section, you got to freeze it because when you drag it across, you're going to wish you had. We don't need dollar signs here because as we drag across, we do want it to refer to this and this and this and this. Hit OK. Oh, I haven't finished, I guess. Oh, type. Type needs to be 0. Let's go back and edit our formula. It's not even giving me a window for type. That's weird. Well, I'm just going to enter it here after this. That's so weird. Okay, there we go. 21,275 is the interest I'm going to be paying on this loan. So make sure your last argument is a 0. It's the type. Okay. All right. And then drag it across. Make sure you've got your things frozen with the dollar signs, and it should work. These are the right numbers you should have. And for the principal, this is the amount of the loan we're actually paying down. So that's called CUMPRINC. Let's just try it this way. See, there it is. Now the rate, see it's how it's bolded. That's what it wants. That's the rate. comma. Now it wants the number of periods, 60, comma. Don't forget your comma. Present value is the amount we borrowed. Click, comma. The start period is that, comma. The end period is that, comma. And the type is 0, I believe. And before we hit enter, or you can hit enter if you want to, this is the right number, 86,576. But before you drag it across, be sure you've frozen the things that are referring to these cells here. And that's going to be, again, your D8, your D10. I'm using the right arrow key to scroll around in the formula. It's a much quicker way than using your mouse. Hit enter. Now we can drag across. Fill that in. Now what has happened to our loan? How much do we owe at the end of 60 months? We owe nothing, right? This is how we're paying down the loan. See how the amount we owe is going down? Here it only went down like 90,000. Here it went down 100,000. So we're paying it down faster. And let's see. What else do I want to say? Anyway, if you highlight both of these, just to show you, if you highlight both interest and principal with your mouse, so they're dark, and you look down here under sum, 107,852 is the sum of the whole year's payments we made. Take the monthly payment times 12 months. It should come to the same number. 107,851. 107,852. It's rounded, but yeah, you see what I'm saying? So this is the total payment we're making, the total payments for the whole year, but some of it's interest and some of it is paying down the loan. I think we're done with this step. Let me just read through it again. And it's telling you in the problem to use absolute references for the rate for these things. Absolute references means put the dollar signs in there. All right, we're on step 4 now. Calculate cumulative principal payments as follows. No, we just did that. So we're on step 5, aren't we? Hey, we finished the step. Very good. Step 5, depreciation. I'm sure you all know what depreciation is. We've talked about it in Accounting 101. I don't know if you're aware, but Excel will calculate depreciation for you. So we have this asset that we paid $478 for. Okay, guess what? We borrowed this money so we could do what? Buy an asset. So we're taking all that money we borrowed and we're buying an asset with it. This asset has a salvage value of that and a life of 6 years. I'm not going to go back through what salvage value is. Maybe watch a YouTube video on depreciation to see how it works. That's important to know, though. Annual depreciation for straight line, that's easy. Now, of course, you could go in and do it. What's the formula for straight line? You know, don't do it this way, but it is the cost minus the salvage value divided by the life. And that will get you the right answer of 67,058, but it's going to mark you wrong because it wants you to use the depreciation function of Excel. Yeah. So honestly, this is how I did it, Ernst. I didn't use the depreciation functions, but it's handy. So we'll use the formula wizard. I don't know exactly which category depreciation is in. I can just go here to all. Not financial. Maybe it's financial, but go to all and just type SLN, straight line. That's what it stands for. Hit go. Returns the straight line depreciation of an asset for one period. Okay, so click on that. The cost is that. Salvage is that. The life is that. Now, are we going to be dragging this across to get depreciation for years 2 through 6? Yes. So as we drag across, we don't want these also referencing columns E, F, G, and H. So we want to freeze these as well. So all 3 of these need to be frozen, or they need to be absolute references, as your book calls it. I wish I knew the shortcut key to just do that in one step, but I don't. And then we drag it across, and there's your straight line. It's the same every year because it's a straight line. And this is accumulating your depreciation. So at the end of 6 years, we have total depreciation of 402,350. And the book value has gone from, 410,942 down to 75,650, which is the salvage value. So this is looking good. This is working. Okay, that is step 6. Step 7, declining balance. Now for this, sometimes I would mostly we use the DDB formula, which is double declining balance. And I believe that's what we taught you in Accounting 101. But here they're using the regular declining balance. It's just another depreciation method. So, of course, you can type it in the cell like this, and it'll guide you along. And we can do that, or you can use your formula wizard up here. I've seen some of you guys go up here to the formulas and look for things there. I mean, that's okay too. I have a hard time finding them there sometimes, though. But anyway, I'll use the formula wizard this time. It's DB is the name of the formula. Maybe it is financial. Let's see. It is. Well, I don't know if that's all DB. Just to make sure. Yeah, DB is the depreciation. Again, the cost is that. Salvage is that. The life is that. Okay, the period is going to be this because it's the first year's depreciation. And we don't use month. This is used for mid-year depreciation. So as we drag across, which we are going to do we want this to freeze? Yes. So go ahead and freeze that, that, that. But as I drag across, I really do want year 2 depreciation, year 3 depreciation, year 4 depreciation, etc. So I'm not going to freeze C18. I'm not going to freeze C18. I'm going to leave that unfrozen. Drag across. And the last year's depreciation should be 27,171. That's that. Okay. Let's see. Did I miss something where we have to fix this error? Yes, it's set up here. I have skipped step 5. It's okay. I mean, you shouldn't skip step 5. It's okay that I did it though. Back in step 5, it said to go to the depreciation worksheet. There's an error, a value error. And again, I audit formulas by double clicking. The cumulative depreciation for year 2, what is that? It's going to be the cumulative depreciation from year 1, of course, added to year 2's depreciation. If you double click, or we can do trace precedence. I'll just show you because, I mean, I guess it's cool to know how to do that. Trace precedence. This means where it comes from. Okay, all these arrows. I don't like all those arrows. Just double click on it. You can tell right away that it's taking last year's cumulative depreciation, correct, plus a word. Well, that's not going to work. So it should be that. So drag it over or just change it to D19. 219,772. What is this? See, this is correct. Last year's cumulative plus this year's. It looks like it's right all the way across here. But check it out, double click, make sure everything's right. What you should see here is 75,362. Okay, I don't get this part here at all, why they want you to do this, but let's do it anyway. Eight. We're in step 8. So we went from step 7 back to step 5. Now we're on step 8. Juan wants to, for some reason, determine the depreciation balance for the first year and the last year of the product hardware. Okay. Here we're going to use, for some reason, the sum of the year's digits depreciation method. Don't worry about it. Not many companies use this. We didn't teach this in Accounting 101. So let's just get through this step. I'll show you what to do here. In cell E23, enter a formula using the sum of the year's digits function to calculate the depreciation for the first year. All right, let's do it. SYD returns the sum of the year's digits depreciation for a specified period. The first year is what we want. So we'll be clicking on that 1 at some point. We want the cost. Are we going to be dragging this across? No. So I'm not going to bother freezing it. We want the salvage, comma. We want the life. We want the period. So I guess that's a period. Period 1. And then close parentheses. And you should have 114,957. And for the last year, I mean, I guess you can just do it again for next year. I wouldn't use the fill handle because it's going to be all messed up. And it doesn't take that long. SYD. Oh, equals SYD. Cost, comma, salvage, comma, life, comma, and we want years, the last year, 6. Okay, fine. This is a weird question to ask you. That's it. For 9, go to the estimated earnings worksheet. This one I had to look up, but it's pretty neat. I have never known how to do this before in my life. I had to go into the book and look this up. So if you have the textbook, go into module 9 in the textbook and flip through it. It's in there. I don't have the page number with me right now, but it's in there. I had to look this up. Okay, what we need to do here is we know what year's 1 sales were or going to be, and somebody has estimated year 5 sales, and they have told you in the problem. This is number 9. He estimates sales will be 825 in year 1 and 1.8 million in year 5. We just need to fill in years 2, 3, and 4. And they're telling you, estimating that the sales are going to increase at a constant amount from year to year. Project the sales amounts for years 2 and 4 using a linear trends interpolation. Oh boy, I hope I can remember how to do this. I had to go to YouTube to look up how to do this, and YouTube was zero help. If you find a YouTube video that shows you how to do this, more power to you, but I just had to look in the book. What you do is you highlight everything, including the first and last number. And we're going to go under home, I believe. And editing and fill. You're going to get down, right, up, left. Series is what we want because we do. And we want linear because that's what it said we want. Linear means it's going to go smoothly from here to here. So that's what we want. That just appeared. I hope that's right. That's not even the beginning value. Well, we'll see. Is this the right number? Let's see. I'm going to check the solution to make sure I'm steering you in the right direction. These are all the correct numbers. Okay. So what it did is it automatically, and these are just hard-coded numbers, it automatically added it by a certain amount to get it smoothly up to here. Here's your sales, right? Kind of smooth. Now for the what else? That's that step. We're done. Step 10, we also need to calculate some expense amounts. Looks like miscellaneous. We've estimated the year 1 and year 5, but these are blank, and we want to fill those in as well. We think the expense will increase by a constant percentage. Okay. And so in this one, we're going to use the growth trend, not the linear, but the growth trend interpolation. So again, just like before, we're going to highlight all these and go to Fill, Series, and select Growth. And hit OK. That is really bad. That's not right. Fill, Series, Rows, Growth. Let's see, what am I missing here? Oh, we need to select the trend box. When you do growth, you need to select the trend. There we go. So it went from that to that, up to that, up to that, up to that. And I think it's not linear like this evenly. I think it's like it increases by an increasing amount. So it increases faster and faster until it gets there. It's just a different way of doing it. Now, I'm not sure if we were supposed to check trend in number 9 or not. Perhaps we were. But anyway, these are the right numbers. I'm double checking one more time. They are. It gave me the right numbers. Now for rent, we know the first year's rent will be 45,000 and it's going to increase by at least 4% per year. So project the rent expenses as follows for years 2 through 5. Well, if I was doing this, I would just do equals that times 1.04, and that's giving me the right numbers. And I keep going across and I get exactly the right numbers, but it wants you to use the functionality of Excel. So what we do here, I believe, is we select all of this, Fill, Series, Growth, Trend. And it got me nowhere. Oh, I know why it didn't work. I know why. So Control Z just undoes it. So I'm back to where I was. Again, go back to Fill, Series, Growth. Do we want Trend or not? I don't know. I mean, why not? No, we don't want that. I want the step value. See, I had the step value set at 1, so it keeps it the same. If I do 1.04, it's going to add 4% to each previous one. So each one is increasing by 4%. Pretty neat, huh? Okay. Step 12. Got 4 more steps and we are done. The estimated gross profit line chart. Wait a minute. Yeah. So the estimated gross profit chart, line chart, in the range H25 to Q45. Yeah, okay, there. Shows the revenue estimated for years 1 through 5. See? But how many years do we have? Well, 5. Okay. We want to extend the projection into year 6, though. Modify the estimated gross profit line chart as follows to forecast the future trend. We want to carry the same thing out another year. I imagine it's just going to keep going higher and higher. Okay. Add a linear trend line to the estimated gross profit chart. What we want to do here then is, and this is again, tricky thing about charts, don't click on the line or the legend, just click away. Click in the general chart, like maybe here. So the whole thing is highlighted, not just the line or the legend. Once you're in there, you see chart design, add chart element, and it says to add a linear trend line. Trend line. There we go. Trend line. Linear. There we go. I see nothing new. Format the trend line to forecast one period forward. And what we do here is we've added it, but I don't see any difference here. What I did is I right-clicked on the line itself to get this menu, format trend line, and you get this popping up forward, and just put one there and click away. We'll click out of there. What it did was, it looks weird. It didn't add year 6 here, but it did extend it out. I checked the solution, and that is exactly how they want it to look, as weird as it is. Ideally, we'll want to add a little thing that says year 6 here. Okay, whatever. Like I said, this project is a little strange. Number 13, the projected monthly revenue scatter chart is based on a monthly revenue estimates. We want a trend line to show how revenues increase, blah, blah, blah. So this is nice, but they're kind of like, it's kind of dotty. We want a smooth line. Again, don't click in there. Click like in the general area. We're going to add chart element, and we want a what? A logarithmic trend line. Is that what it says in step 13? We're in step 13, by the way. Okay, we want a trend line, and we want a logarithmic format. Okay, trend line. I do not see logarithmic here. More trend line options. Okay. And that's straight, isn't it? We don't want that. We want logarithmic. Can I format the trend line? Okay. I right clicked on this line, and I'm going to do not linear, because that's just makes it linear, but I want logarithmic. Then you can X that out. Okay. It's showing that, wow, it increases fast and then levels off. It's easier to see with a line than with the little dots. Anyway, this is how it's supposed to look, so we're good. We are on step 14 now. Next to last step, go to the investment analysis worksheet. What's this stuff? I don't know. Investment analysis worksheet. This worksheet should show the returns potential investors could realize if they invested $295,000 in us. We figure a desirable rate of return would be 10%. It's already there. He estimates the investment would pay different amounts each year. C8 through C12. Okay, I get it. Calculate the present value. Okay. In cell C15, we want to figure out the present value. Let me explain what that means. Let's do the formula first, and then I'll show you what it means. We are going to use the NPV function to calculate the present value of this investment. Equals N. Well, let me use the formula wizard. We'll go to all. Probably financial. Find it quicker if you just, it's under financial and it's NPV. There you go. Okay, this is the net present value formula. The rate, 10%. And under value, hang on a second. Oops, sorry, I clicked the wrong thing. Let's just cancel. Sorry, let's try this again. Net present value. Recently used. There we go. The rate, again, 10%. And then the value, the present value of what? It's the present value of all these cash flows. Oops. That's the rate, the value. Now you could enter value, value, value independently, but you could just highlight all this. And we don't need that. So what this is doing is saying the present value of all this money isn't what you think it is. See when I highlight all of them and I get the sum, look down here. How much money are they giving us? 295, right? They're investing that in us. We're going to pay them back this. Okay, this amount each year for 5 years. What does that amount to? Look down here. They're giving us 295. What are we giving them back? 443,500, which sounds like a really good deal. They are making over about $140,000 on this investment, but it really isn't like that. What's really happening is they're giving us 295. What are they getting? They're getting 324, 292, not 443, 500. I mean, they really are getting 443, 500. But the fact that we have to wait a whole year to get that money, we have to wait 2 years to get that, 3 years to get that, 4 years to get that, 5 years to get that. Having to wait 5 years to get this money makes it less valuable, because if we had gotten that money immediately, we could have invested it at 10% and made money. So having to wait for money makes it less valuable. The present value is that number. It means, what is all this really worth to me today? If I were to get everything today, it'd be like getting that. All right. So just remember, it's better to get $100 today than have to wait a year and get it at the end of the year. So that's the present value. The internal rate of return. We're going to use the IRR formula. Again, they cover this in your finance classes and in your accounting 101 or 102 classes. So I'll just walk you through the formula. It's going to be under financial again, and it's the IRR formula. What this means is we are, they are loaning us 295, or they investing 295 into us. They're getting back 324, 292. So what is the interest rate they're getting? That's basically what this is saying. What is the interest rate they're getting? So we do is our values are again going to be this. Okay, we can just highlight all that, C7 through C12. It's going to give us a net present value. And the first number is going to be in the first year, second, third, fourth. So it should work if I just do that. 13.34%. These folks are trying to get 10%. We are actually giving them 13.34%. They're investing this much in us, and they're getting this much out of us. So that's a pretty good return. It's a 13.34% return. Guys, I think we're done. So I hope this was helpful. I looked at the other project and it's very similar to this. So if you have any questions, let me know. Otherwise, I hope y'all have a great day.